Hey everyone, welcome back to the ECAP channel. For those of you that are new, my name is Corin Thompson. I'm the CEO and founder of ECAP. We do two core things. So one is we do financial due diligence for investors who are looking to invest in companies. So we write red flag reports for them. And then we also do fractional CFO work for companies who are fundraising or going through M&A processes. Now, as you've seen with a lot of the videos on this channel, they're very polished, they're very professional, they're done in a studio or in a podcast room, and I have a proper individual filming them and editing them. However, just under 4 weeks ago, I gave birth, and therefore I do not have time or inclination right now to get in a podcast room or studio. But what I really wanted to do was to keep kind of putting out good, valuable content that allows you to kind of make decisions from a finance perspective or from a CEO perspective within your own businesses. And one of the things that we're starting at the moment is a series around financial due diligence learnings. So we want to aggregate and cover some of the key learnings that we find when we go in and we do these red flag reports on behalf of investors. So let me dig in a little bit more on this. So these reports that we write are basically geared up around the finances of the company. They're anywhere from companies that are kind of, a couple of individuals or, doing a couple of K in terms of revenue through to companies that are doing sort of 40, 50 million type revenues or that have, employees of like 100 plus employees. So there's a real kind of spectrum and range in there. We do more, I'd say, on the earlier stage than on the later stage at the moment, where investors are looking to put in checks of between kind of like 2 and 5 million into their company. So when we go in and we write these red flag reports, what we're looking at is we're looking at the last 12 months of P&L, balance sheet, cash flow statement, and then we're also looking at the forecast and the assumptions that make up the forecast as well. So one of the red flags that we typically pull out in our reports is geared up around age receivables. So each week, by the way, when we upload these videos, I'm going to upload a new video in terms of like one of the key red flags that we pull out and what we find and what typically should be in place. And so with age receivables, what we typically see is we normally ask for a breakdown of the trade receivables balance, and then we normally asking for the aging profile of it. So when was the invoice due, and then how old is it now? And typically that's bucketed into 0 to 30 days, 31 to 60 days, 61 to 90 days, and then 90 day plus. So on the age receivables, there's normally two core issues. One is that we find with certain companies, less so those using accounting softwares like Xero or QuickBooks, but more kind of bespoke software out there, we find that often people have to manually add the aging profile onto the trade receivables, which means it's just not being tracked thoroughly on a monthly basis or even on a weekly basis. The second key issue is there's often normally not a process around it. So sometimes a finance person will, wait to a certain point and then say, oh, actually, let's dig into these trade receivables. Let's follow up on some of the bad debt. Let's see if we can collect it, bring it into the business. But actually, like this causes more work by not having that kind of standardized process. And when I say standardized process, what I mean by that is having a set process that you follow with every single client, regardless of the type of client or regardless of who it is, in order to chase up any kind of invoice that's gone overdue. And a typical kind of standardized process that we see from like chasing up bad debt is normally, let's just say a company has a 30-day payment period. Normally, if you get to 31 days, for instance, or 32 days, so you've gone past due, you might send an email to the customer or the client saying, hey, your account is now overdue, or hey, this invoice was due yesterday, whatever it is. Please can you make payment? Here are the payment details provided in case you don't have them on the invoice. And then you might wait till 45 days or a couple of weeks after that initial email and send another one just being like, hey, we noticed your account is still overdue. Can you please make payment on that account? You might then wait till 30 days after that invoice became due, And then you ask the customer support team or the sales team, whoever sold in the deal or whoever's managing a client, if it's like an enterprise client, you might say to them, hey, actually, can you get on the phone with this customer and just say, where's the invoice? This invoice was due. And just understand if there's an issue with them making payment, or there's an issue with bank account details, or maybe there's an issue with the product or the service and they don't want to pay. So just try and get to the bottom of it. And then if they still haven't paid, let's say we wait another couple of weeks, you might want to get just a standard legal template, or like get a lawyer to kind of draft up a standard letter and send that out and just be like, hey, your invoice and account is overdue. Legally you're obligated to pay this. The lawyers are very good at putting in pretty like strict legal language that makes it look a little bit scary. Add it onto letterheaded paper, send it over email, but then send it in the post as well. And then you might want to wait another couple of weeks, and then you might want to send another legal letter, maybe get sales, customer support on the phone with them as well, again, just to kind of chase that down. And if it's an ongoing service, you might say, look, we're going to cut off your service, cut off your subscription unless payment is made. If it was a one-off product or service, just say, look, we might need to escalate this now through to other kind of legal channels. At that point in time, you may want to also then get involved like an outsourced debt collector. So these outsourced debt collectors are normally pretty good at calling most days these companies and chasing up the payment, sending emails, sending written notes to the company, written letters, to the company, calling the CEO. They'll call as many people as you basically list down within the company for them to call. And so that's normally like a next step. And then I'd say if you wait another couple of weeks and nothing comes of that, then I'd say, crank it up another level. So actually the government has a really good service. I'll drop it in the comments section, where you can enforce basically like a CCJ, which is a county court claim, or like a court claim basically against the company. So you put forward your contract, you put forward the invoice, you state how much is overdue, whether there's any accrued interest on it, and then they will send a letter over to the counterpart that owes you money, and they will chase them, and then you can enforce at some point in time a court claim basically for a court entry basically for this to be decided in terms of the amounts that are due. So like nailing down that standardized process just means that it takes any thought process out of it. It means that you put it in the calendar so that okay, this morning, every 2 weeks, we're going to spend time chasing up any kind of receivable or bad debt, and you stay on top of it. I'd also say get out accounting software that basically will show you at any point in time the aging profile of that debt as well, because then you can understand the severity of it and you can understand the different measures that can be applied as part of your process. Alrighty, I hope you found that helpful. Like I say, we're going to do these at least every week. They'll be fairly not ad hoc, but they'll be fairly informal videos like this. But we'll cover basically some of the things that we're finding from financial due diligences that if you're in the finance remit or if you're a CEO, you should be aware of. All right, lovely to talk, and speak soon. Thanks. Bye-bye.